Let us begin the deep dive into one of the most misunderstood secrets of wealth: how the rich legally use taxes to build even more wealth. This is not about shady loopholes or risky schemes. It is about understanding the system, the rules, and the mindset that allows wealthy people to turn one of life's biggest expenses into a tool for growth. If you have ever wondered why the tax bill feels heavier for the middle class than it does for billionaires, the answer lies in strategies that anyone can start learning. Taxes are one of the biggest costs in life, often larger than rent, food, or even healthcare. Most people see taxes as a burden, something they must pay and move on. The rich see taxes differently. They see taxes as a game of strategy, a game with rules, and if you understand the rules, you can play to win. While many work for a paycheck and pay taxes automatically, the wealthy design their income in ways that give them control over how much tax is owed, and when it is paid, that control is where the power lies. One of the most important differences is how income is earned. There is a saying that the rich earn income in ways that are taxed the least, while the poor earn income in ways that are taxed the most. A typical employee earns a salary. That salary is taxed at the highest rates, and it is taxed before the employee even touches the money. Wealthy people often focus on investment income, business income, and assets that are taxed differently, often at lower rates or even deferred for years. This single difference changes everything. Here is an engaging thought. Imagine two people making the same amount of money, one through a paycheck and the other through investments. The paycheck earner could lose 30 to 40% to taxes before even seeing the money. The investor could pay 15% or even nothing if they use legal strategies like deferring taxes. That gap over years creates massive wealth differences, even if the starting income is identical. This is why understanding taxes is not just for accountants, it is for anyone who wants financial freedom. Another key strategy the rich use is deductions. While most people file their taxes with only a few standard deductions, the wealthy treat deductions as opportunities. Business owners, for example, can deduct expenses like travel, office equipment, professional services, and even meals. These are costs they would often pay anyway, but by structuring them through a business, they reduce taxable income. The difference is that the rich think before spending, can this expense be structured in a tax-advantaged way? Over time, those deductions add up to thousands or even millions in tax savings. Real estate is one of the most powerful tax tools for the wealthy. The government wants people to build housing, create commercial spaces, and improve communities, so it rewards real estate investors with generous tax breaks. Depreciation is a major one. Depreciation allows investors to claim a paper expense that reduces taxable income, even though no cash is spent. Imagine owning a property that is going up in value while you are writing off depreciation each year. That combination is how many wealthy families grow their fortune while lowering their taxes. There is also the concept of borrowing against assets. When most people need money, they sell something and pay taxes on the gain. Wealthy individuals often do not sell. They borrow against their stocks, real estate, or businesses. A loan is not taxable because it is debt, not income. This means they can access millions of dollars for living expenses, investments, or luxury without triggering a tax bill. To the average person, this seems strange, but it is perfectly legal and extremely effective. Retirement accounts are another area where taxes can be turned into an advantage. While many people simply put money into a 401(k) or IRA, the wealthy often max out these accounts and then use advanced versions like self-directed IRAs to invest in real estate or private businesses. By doing so, they keep the growth tax deferred or even tax-free. Over decades, the difference between tax growth and tax-free growth is staggering. It is one of the quiet ways the rich stay ahead while the average saver barely keeps up. Here is something interesting to consider. Taxes are not only about money leaving your pocket, they are also about timing. The rich understand that deferring taxes is almost as good as avoiding them. If you can push your tax bill into the future while investing the money today, you get the benefit of growth on money that would otherwise have been lost. Even if you eventually pay the tax, you are paying it with dollars that have grown much larger. That timing difference is one of the most underrated secrets of tax strategy. Charity is another powerful tool. While giving may be motivated by generosity, the tax code rewards it heavily. Wealthy individuals donate to causes, but they also structure those donations in ways that maximize tax savings. For example, donating appreciated stock instead of cash allows them to avoid paying capital gains taxes while still getting a deduction for the full value of the donation. They support a cause they care about, reduce their tax bill, and keep more wealth circulating in their world. Another advanced method is using trusts. Trusts allow wealthy families to pass wealth across generations while minimizing estate taxes. Without planning, a large estate could be taxed heavily when transferred to children. With trust, families can protect their assets, control how money is distributed, and reduce the tax bite dramatically. It is not only about the current generation, but about building lasting wealth that continues to grow even after the original owner is gone. International strategies also play a role. Some wealthy individuals set up businesses or accounts in countries with favorable tax laws. While this must be done carefully and legally, international planning can provide lower tax rates, asset protection, and global opportunities. It is not about hiding money, it is about aligning with systems that are more favorable. Multinational corporations do this regularly, shifting profits to countries with lower rates, and individuals can learn from these models on a smaller scale. At this point, you may be thinking that these strategies are only for billionaires. The truth is, many of these ideas are available to anyone willing to learn. Starting a small business can open up deductions. Investing in real estate, even one rental property, can unlock depreciation benefits. Using retirement accounts wisely can create tax-free growth. The secret is not waiting until you are rich to use tax strategies. It is using tax strategies to become rich. Think about it, taxes are one of the few areas of life where the rules are written in plain language, yet few take the time to understand them. The tax code is long and complex, yes, but most of the powerful strategies are built in on purpose to encourage certain behaviors. The government wants people to invest in housing, in businesses, in energy, and in retirement savings. By aligning with what the government rewards, you benefit both yourself and society while legally lowering your tax burden. One of the biggest mistakes people make is treating taxes as a once-a-year event. They gather receipts, send them to an accountant, and hope for a refund. The wealthy treat taxes as a year-round strategy. Every decision, from how they earn income to how they spend, invest, or donate, is filtered through the lens of taxes. They do not leave it until April. They live with tax awareness every single day. That awareness compounds just like investments do. It is also important to remember that knowledge is power here. Many people feel intimidated by tax terms or assume they will never understand it. But even learning the basics, like the difference between ordinary income and capital gains, or how depreciation works, can change your financial future. Once you start seeing money through the lens of taxes, you can make smarter choices that compound year after year. Let us pause for a moment with an engaging thought. Imagine keeping an extra 10 or 20% of your income every year, not by working harder, but by structuring your money smarter. What would that mean over 10 years, over 20? That is the hidden power of tax strategy. It is not about earning more hours at work. It is about keeping more of what you already earn and using it to build freedom. The final takeaway is that taxes are not something to fear or avoid. They are a system. The system can either drain you or fuel you, depending on how you approach it. By learning from the wealthy, by studying how they use taxes as a tool, you can transform one of life's biggest costs into one of your biggest advantages. It begins with awareness, then with small steps, and over time it becomes a habit that shapes your entire financial future. How the rich turn tax savings into more wealth. The real secret of the wealthy is not just how they save on taxes, but what they do with those savings. Every dollar they legally keep becomes capital for the next opportunity. Instead of letting that money sit idle, they reinvest it into appreciating assets, businesses, real estate, stocks, or private ventures that continue to generate income and value. This creates a compounding loop. Lower taxes lead to more capital leads to more investments, and more investments create new tax advantages. For example, a business owner who saves $20,000 through deductions might use that money to buy equipment, which increases productivity and qualifies for even more tax write-offs. Or a real estate investor might use tax savings to fund the down payment on another property, which brings in rent and further depreciation benefits. The middle class often sees a tax refund as spending money. The wealthy see it as seed money. That simple shift in behavior, treating tax savings as investment fuel instead of extra cash, is what multiplies wealth over time. It's not just about what you earn or save. It's about how effectively you redeploy those savings to make money work for you. Learning and adapting like the wealthy do. Another overlooked secret is that the wealthy never stop learning about taxes. They do not wait for accountants to tell them what is possible. They study, ask questions, attend seminars, and stay informed about new laws. Tax codes evolve constantly, and each change brings new opportunities. For example, when renewable energy incentives appear, the wealthy invest in solar or green infrastructure, not just for profit, but for tax credits. When retirement contribution limits rise, they adjust their plans to maximize benefits. The average person treats tax season as a chore. The wealthy treat it as a yearly review of opportunity. This proactive mindset transforms taxes from a reactive event to a dynamic tool. You do not need to be rich to start thinking this way. You simply need curiosity and initiative. Read one article a week on tax saving strategies, understand the basics of deductions and credits, and over time, you will think like an investor. Knowledge is the real tax advantage because it allows you to act before opportunities pass. The rich get richer not only because of their assets, but because they understand the rules better. In conclusion, the rich use taxes not as a punishment, but as a lever. They play by the rules, but they play strategically. They know the difference between earning as an employee and earning as an investor. They maximize deductions, use real estate, borrow against assets, and think about taxes year round. These strategies are not only for them. They are available to you right now if you are willing to learn and apply them. If you found value in this breakdown and want more insights into money, growth, and financial freedom, make sure you join us here at Level Up Wealth. Hit that subscribe button so you never miss the strategies that can change your life. Wealth is not just about making money, it is about keeping it and growing it wisely. The journey starts with knowledge, and knowledge is now in your hands.